What's going on, members? It's your boy Liswa Mutupi, and thanks again on coming back onto my YouTube channel. Obviously, you seem like you've been a person that already has been on my YouTube channel, but if not, then it's okay. I would understand. One thing that you can do for me is to hit the subscribe button. So yeah, I go by the name Liswa Mutupi, like I did say at the beginning of this video. So in today's video, we are going to be speaking about the pros and cons of being a forex trader. Because as much as most people would show you the successful side of things, the positive side of things, like I would like to break it down for you. Like obviously, like I want to share with you some of the things that I sat down and I thought of, and I saw also in the comment box one members were asking me what are the pros and cons, so I was like, what, let me just put this into a video form and let me share it with you guys. So I hope that you do get a lot of value from this video. So now let us jump onto it. And also, just let me not waste time saying this, but yeah, today luckily it's the end of us running and selling the 0 to 6 figure blueprint course. I'm excited, I'm excited to be I'm empowering the members that already did enroll. So yeah, and tomorrow we're going to be launching the 50% off the Forex Jesus 2.0 for like 5 or 6 days, somewhere around there. But yeah, I just wanted to get that off. But yeah, let's jump onto it, guys. Let's jump onto it and speak about the pros and cons of being a forex trader. Boom. Okay, so the camera is rolling. Now let's get to it. So the very first one that I want to speak a bit more on is actually capital. Like I know at first there's a lot of typical ones that we can start off with, but I'll start off with this one. Yeah, there's capital there. So you need capital to be involved in the forex market. So like, what do I mean when I say capital? Obviously, like the market is one of the most cheapest investments that you can start in there with. You can start with as little as $10, $50, I don't know, $100, $1,000, and so on. But you need capital at the end of the day, and you can't make a full-time living or a full-time income with very small capital, which means that you need like at least maybe amounts of over thousands of dollars to invest in, like let's say start trading forex on a full-time basis. Because let's say now you are working a full-time job and you are making, I don't know, $2,000 a month or $1,500 a month. Those numbers somewhere around there. So when you're working and getting that money, for you to be able to replace your income with forex money, you need to at least have starting capital of above at least $10,000. So that if you make 20% from your account, which is $2,000, then for sure that okay, no, I'm gonna make 20% to $2,000, which I can fully replace my income. But if you're going to be starting with $500 and hope to take it all the way up to $10,000, then that's going to be yes, it's possible. I don't say it's not possible. It's possible. We see people doing that. I've done it multiple times, but it's not like the safest way of trading, because as much as you took $500 to that much, you are risking how much? How much is it that you're risking? And there's a lot of risks that comes to that. So capital is the first thing that we need to invest in. We need to see it, and we need to, so if let's say you want to jump into this is an interesting one, if you want to jump into the markets but in a full-time basis. So the best way is to just track down your performance, like within maybe 6 months or 12 months, track down your performance. And while you're tracking down your performance, keep on adding money into your trading account, keep on funding your trading account, because that way it's the one thing that's going to take care of you once you retire from your job. And now you can start trading this on a full-time basis and make passive income, but make an income from just literally trading the markets, on which it's amazing because you are eventually going to get to be your boss. So yeah, that is one of the first ones. So let us move on to the second one. Yo guys, I'm tired. Like I've been putting in the work, I don't know since when, but yeah, I'm excited with the progress that I'm making on the back end of things. So yeah, at times when you're making progress, you don't have to show that you're making progress. Just have to experience it, get over with it, and attack bigger goals. So yeah, that's actually it. So the second one that we have here is actually, so the first one I would say that it's a type of a con type of situation if you get it that way. But yeah, let's move on to the second one, which is leverage. So now one thing that I like about leverage, which I would say this is a pro, is because of the fact that you don't need a lot of money to trade bigger lots, or you don't need a lot of money to trade big movements and so on. Like let's say in order for you to let's say for instance one standard lot size is equivalent to sorry about that, I don't know what this water done to me, but one standard lot size is equivalent to 100,000 units now. So let's say if it wasn't for lots, if it wasn't for leverage, what it would require of you to place one lot is an account with over $100,000. So just to place one lot, you need $100,000. But because of leverage, let's say if it's 1:100, that means that you just need $1,000 account to literally place one lot. And if your leverage is a bit more too much, let's say 1:1,000, you need even like a $100 account can place you one lots. So those are things that you need to be let's say when you speak about leverage, those are things that you need to it can work in your favor if you understand it and if you're able to utilize it in a manner whereby it will work in your favor. But obviously, most people, it kills them, because this way it also, it allows you to risk a lot of capital, because obviously if it means that instead of having $100,000 to use one lot, now you can have only $1,000 to use one lot. It means that now also risk. Most people won't be able to respect risk. Most people won't be able to know that for sure, okay, whatever stop loss that I get, I shouldn't lose more than this much. I should they'll even try to use as many one lots as possible, just so they can keep on growing that account, because they know for sure that if they make profits, they're gonna make a lot. But they forget the fact that if they make losses, they're also gonna get a bigger loss compared to if you go in with let's say a lot size that's suitable for your account. So that's one of the pros that I'd say. Being able to not having, you don't need like $100,000 to invest in the markets just so to use one lot and to make a few because let's say with one lot on a 40 pip move, we're looking at $400 somewhere around there. So you don't need like $100,000 to make $400. Like you can literally make $400 with only $1,000, with only like less than $1,000. So that's one of the pros that I do have. So let us jump on to the next one, which is maybe a con, which is maybe a pro. Let's see what it is. Okay, the third one is actually a pro, because we are going to be speaking about how the forex market is easily accessible and you can trade like literally anywhere and anytime. So that's how it is. I know most of you guys, like maybe you've came across ads, or maybe you've heard people saying that with the forex market it's simple, all you need is Wi-Fi and all those things. That's actually true, because even when I started trading, I didn't have luckily I had a smartphone, but I didn't have Wi-Fi or money to buy airtime. But what I'd do is that I'd go to free internet spots, and then I would literally just do whatever that I can, because like all you need is like literally Wi-Fi. So once you're able to have Wi-Fi or internet connection, and you don't have to have a specific office to trade, you don't have to be in a specific area to trade, you don't have to do a lot of things. All you have to do is literally just take your phone and go to the MetaTrader platform, on which the platform is free. You don't have to pay for the platform, and then you are buying and selling according to analysis. Obviously you need knowledge for that, but that's actually one of the things that I like about it. It's easily accessible. Just like yesterday, me and my lady, we actually went out on a date, and like while sitting there, I was like, you know what, I've been looking at DEX, and I don't want to ruin the mood and stuff, but can I please just see what's happening? I want to execute a trade on it. She's okay, no, it's okay, give it a shot. I went in, I gave it a shot. I'm not sure. Yeah, I gave it a shot. And when we got home, like maybe 40 minutes later, an hour later, when we got home, the trade was moving in profits. But what I'm trying to say is that I didn't have to run back into my office just to place the trade. I didn't have to do complicated things. All I had to do was like literally have internet connection and just go into the app and execute. And anywhere, wherever I am, it's not specific, So yeah, so that's actually one of the pros that I like about it. That's why even back then, 2017, I was trading while I was still in class. The teacher, the lecturer would be saying 1, 2, 3. They'll be saying this, but me, I would be under my laptop, just placing. Not laptop, under my desk, just placing trades, analyzing the market, seeing what I can see, doing 1, 2, 3, and I'd walk out class. Maybe even if I made $5, $4, but I was in class, I walked in class, and I walked out of class a bit more richer than I walked in. So that's the market for you guys. I like that a lot. It's exciting to know that. But yeah, let us now move on to the next one. Okay, so the next point, which now we're going to be speaking about margin. So I know for sure you guys do know about margin call, about these free margins and all those things. So what actually happens is that, like, let's say we've got a specific account balance, and you executed trades according to a specific leverage, not specific leverage, specific lot size. And obviously leverage also plays a part, because it depends on also what leverage you have as with the broker that you're trading with. So what happens is that, like, when the trade is running against you, when it's running in negatives and stuff, automatically what can happen is that they can close that trade for you, only because of, like, they can see it's what we call margin call, and depends on also brokers on what specific percentages they pay around with and all those things, because it's not the same. But it's and also the leverage. What happens is that it depends on the broker and the leverage. But what happens is that margin call happens there. So when you're experiencing a negative trade, and even though it's gonna come back, you see that it's gonna come back, it's maybe testing support areas and stuff, and you just want it to hold a bit more longer, and the broker automatically just closes the trade on negative. And after a few, let's say after a few minutes, when you come on the charts, you look at the trade setup, it shot up, you're excited, you're like, yeah, it's shot up, it means that I'm running nice profits on the other side. When you go back on the other side, find out that the broker closed that that trade with a negative, because they saw that the way this trade is running, it's not fit to be with your balance. Like, it's amazing because it helps you with not blowing your accounts fully to like zero or negatives, but it sucks at some point, because find out that it didn't have to close at that specific area, and just the way it closed, it actually retraced at that area, and you didn't have a stop loss at that area because maybe you had a visual stop loss or something like that. So that is margin call for you. It's actually a con. It's not a good side of it. It's not a good side of it, but once you understand a bit more about it, you'll see where it actually comes and how you can take advantage of it, because at the end it prevents you from bringing your accounts to literally a zero. But it sucks that they automatically just close your trade with a negative, because they feel like it's not too safe. So yeah, that's something that you need to also look into on your side. It's margin, so it's margin call. Yes, okay, we spoke about it being margin call on the negative side of things, but now this can either be a pro, it can be a con from your side. So it's risk management. So these are one of the things that actually influence if you are consistent, if you'll be successful, if like, it's actually it's one of the most important things when it comes to the success of a trader. So risk management, like, there's even strategies for just risk management. At first I thought that I had to tweak my strategies, my entry points, my what, just so I can make a lot of money and just so I can be highly profitable. But it's not that. It's just the risk management. You need to come up with the way that you are at managing your risk. Like, let's say, for instance, I once came across a saying that said that even if you do not place a trade, you still saved your capital. Because if you go in the market and place a trade on a setup that doesn't excite you, then you lost. If you're losing 1%, you lost 1% unnecessarily. But if you are seeing that, okay, no, this setup is not going to play in my direction, or you're just not too safe with it, and then you stay away from it, you saved your capital. The one most important thing when it comes to trading is to preserve your capital, is to protect your capital, not to 10 times whatever that you're making each and every time. It's to protect it. And once you learn on how to protect, that's why most people, when they start by going to the negative, they start by losing money. But if you can start by focusing on protecting your capital, making sure that you barely keep your losses minimum, you keep your profits a bit more, 2 times higher than your losses, and also you break even as quick as possible. I'll be uploading another video soon I'll be speaking about the break even method, but also you break even a bit soon. If it's in profits, you lock as much profits as possible, and so on. Then you understand that, wow, it's actually simple to be profitable. It's just, you don't even need a high winning strategy. Just need to keep on just break evening and just locking as much profits as you can. So what happens is that, when it comes to the risk management side of it, while speaking about the pros and cons of being a successful forex trader, when it comes to the risk management, obviously you start with the negative, and then you focus on becoming break-even trader. And you're not losing money, you're not making money when it comes to trading, you're just breaking even. So it meaning that at the end of the month, it's either you lost just 1% or you made just 1%. That's your areas. Once you get to that level, then you can now do what you can start tweaking in order to go more to the upside. Now people want to go from going back like in the negatives to automatically just 10 times doubling the accounts, doing 5 times in the accounts and stuff, on which it's not possible. You should just learn to take it as a step. Go from a negative to breaking even, seeing that you're not giving money away, you're not losing money, you're just not making money at all. And then focus on, okay, you've got this tight, and now you're consistently breaking even. Let's move a bit more to the upside. What can I do to, make that 1% tweak that's gonna, allow me to see success? Then okay, maybe it means that I need to lock, when the trade goes into 1% profits, I shouldn't move to break even. I should at least lock 0.50. That's a small change, but I promise it's gonna change a lot of things. So those are one of the things that people do not see, or even if they do see, they do not take or act up on like they don't act on these things. And once I started acting on them, like a lot of things started to change. I started to see the markets a bit more different, and I started having a longer term picture, because I would always want to be like, oh, I want to make $10,000 now, I want to make 10,000, but I started having a longer term picture on what it's actually it doesn't matter what actually happens for today. What matters is make sure that you're keeping your weekly performance right, make sure that you're ticking down your goals on a daily basis, make sure that also on a monthly basis you are, you know, taking down your goals, on which you have to, the trades that you enter should stick to your plan, on which it's like, you know, to protect my capital, you know, I need to, you know, take specific things when I'm in profits, how do I manage the trade, and so on. So those are the cons and pros of being a forex trader. I wouldn't say forex trader, I would say a successful forex trader, because once you start following these steps, or maybe these things that I told you about, these methods that I spoke to you about, maybe I'll make a video soon. I'll just see if you guys do like it. Yeah, if you just like this video multiple times, then I'll see, and I'll make a video on going, like, I'll make a specific video for each and every thing that I just mentioned in here, for each and every method that I mentioned. So meaning that I'll make a video on speaking about the margin call on its own, make a video speaking about the leverage on its own, so you can take advantage of that. So but yeah, that's it guys, that's it. I hope that you find success, you know, watching my YouTube videos. Obviously I see a lot of you guys are excited, you know, with the message that I share, with the things that you are just, you know, I'm learning from my YouTube channel. I'm excited, you know, and I'm also growing as a YouTube brand on social media and stuff. So I'm just excited with the support that I'm getting from you guys. So yeah, just make sure that you are also in my Telegram public group, on which that's where, you know, you'll be able to, you know, get a bit more updates from whatever that's happening from my side of things. And yeah, I'll see you guys on the next video. Obviously, you know, it's your boy Liso Mutupi. I'm always coming back with valuable information. Not only that, but I'm always coming back to just, you know, I believe that, you know, it's one of those YouTube channels that when you're going through something and you come and watch any video of me, you'd be like, wow, you are speaking with me, you know. So yeah, that's my purpose guys, and I will see you guys on the next video. Your boy Liso Mutupi. Make sure that you like, subscribe.